Hello, welcome back to this week's market update. Today is Monday, November 17th, 2025, and we'll jump right in. Looking at last week's market performance, stocks started the week on solid footing but moved lower as concerns over stretched tech valuations weighed on sentiment. The federal government reopened after a record-breaking 40-plus day shutdown, although funding only runs through the first month of the new year, leaving the door open to another potential shutdown in just a few months. As of Friday, November 14th, the Nasdaq Composite slipped 0.45%. The S&P 500 almost flat, up 0.08% last week, and then the Dow Jones Industrial Average up 0.34% last week as investors favored value names. As I mentioned, technology stocks had a pretty uneven week as investors questioned whether parts of the AI space have run too far ahead of their fundamentals. Here you can see the global AI technology ETF fund down at 5.5% in the month of November so far. We also haven't had a really meaningful pullback really since the spring, so some volatility is not unexpected. Seeing a 5% drawdown in a matter of a week or two is not completely unexpected in such a volatile category of stocks. We also have some uncertainty over how companies estimate the useful life of their technology equipment, which directly affects the financials of the company. So essentially, depreciation is a pretty discretionary part of accounting. It really comes down to a lot of judgment within the company over how long equipment can be used for, which at this high pace of evolution in technology, we don't know how quickly technology will become obsolete. So, a lot of unknowns in that space as well, which obviously affects the financial statements and the intrinsic value of a lot of these technology companies. And with NVIDIA's earnings report coming out on Wednesday, it will be another pretty big week for technology stocks. So, something to keep on your radar in the week ahead. Similar to technology stocks, Bitcoin pulled back last week. It is now down 24% from its October highs, officially entering a bear market now that it is down 20% or more from its recent highs. Risk off sentiment hit both mega cap and crypto simultaneously, hence why you see the two asset classes moving pretty similarly, even though they are fundamentally different things. Now, Bitcoin is up less than 2% year to date, actually falling behind US stocks overall. So the S&P 500 up, 15, 16% year to date as of the market close on Friday. Bitcoin up just less than 2%. So a pretty big disparity. You can see how shifting risk dynamics in market conditions can really quickly affect a asset class like this, falling 24% in just a matter of several weeks. We are just a few weeks away from the last Federal Reserve meeting of the year. There's been a lot of shifting dynamics around the probabilities for another rate cut by year end. So we've had, as I mentioned, over 40 days of pretty minimal federal economic data due to the shutdown, creating a lot of uncertainty just about where the state of the US economy is. Now, we do have some state level initial claims data as well as earnings data that we'll take a look at in a second, looking pretty solid, but we did have a pretty big shift over the past week in expectations around a rate cut. So here you can see currently the odds are for just a 45.75% chance of a rate cut, down from almost 70% a week ago. The odds of no rate cut rose pretty significantly from 33% to now 54%. So, pretty significant moves in the expectations for the December Fed meeting. And then this week, looking ahead to some economic data that will definitely have an impact on this outlook. Previously scheduled for the beginning of October, but not released due to the shutdown, we will now get the September labor market report on Thursday this week. So stay tuned for the markets this week. We have NVIDIA reporting earnings after the close on Wednesday. We also have this jobs report early on Thursday morning. So a lot of economic data and potentially market moving news in the coming days. Last but not least, taking a look at where we are in Q3 earnings, we have just about 92% of the S&P 500 reported, 82% beat EPS expectations, and the S&P 500 is on track for 13.1% earnings growth, up quite a bit from the initial expectations of closer to 8%, and we're on pace for over 8% revenue growth compared to a year ago. We're seeing leadership in names such as info technology, utilities, financials, materials, and industrials. So generally all pretty risk on industries minus utilities, but utilities is getting quite a boost from technology stocks, investing in energy, electricity, as well as just some tailwinds of higher electricity prices benefiting utility stocks. So overall though, of these five names that are outpacing the S&P 500 in terms of earnings growth, they are all pretty risk on sectors. So despite valuation and fundamentals and entering year end look pretty supportive. So that concludes this week's market update. We really appreciate you tuning in and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.